Welcome back to Total Market Traders' weekly Forex outlook. Now, I want to start off by basically going into slightly what happened with the FOMC and why did the dollar behave the way it did. And then I want to give you pick it up where we left it off last week and to give you a rundown on a couple of pairs that I will be monitoring throughout this week basically. So to start off with the US dollar, what we had is the expectation from market participants and investors was that despite the slow growth from the US, what we will see is despite all of that coming through, the US and the Federal Reserve will try to at least raise the interest rates one or a maximum of two times this year. Those who were very optimistic, they were possibly putting the dot plot for two interest rate raises and a lot of others for one interest rate hikes. Now, that did not actually happen when the FOMC came out and the Federal Market Committee statement was released. What ended up happening is the Federal Reserve stated that they're not looking to raise interest rates due to the current conditions, and there will not be any interest rates increases throughout the year. And that was, for some, quite a shock. Now, we could see that leading up to the announcement, we could see some US dollar strength, and as soon as that happened, we could see the US dollar selling off. So up until then, we were holding on the 50 EMA on the daily as well as above that trend line. And you can see here the knee-jerk reaction of what happened. A lot of sellers got wiped out from this because as soon as we retested this trend line on the weekly, we formed a pin bar candle. Now also, this is the dollar index only, but if you look on the euro dollar, very similar thing happened. You had the channel on the daily, which was a very nice channel. However, it was broken above due to that announcement, due to the US dollar weakness, as soon as that statement was going to the market and market participants. And the 114 was broken above only to be rejected a day later due to a false breakout. And now we are back into this channel once again, almost with price not wanting to maintain its long-term outlook. So yes, the fact that the Fed came out saying that there's not going to be any rate increases, it seems like the dollar's weakness was quite short-lived, because yes, we sold off, but we are still above that 112. We are nowhere near of making lower lows. Dollar Canadian similar. So this was a trade that we talked about and discussed in the last couple of weeks. We held on to this again, and after this basically range, the dollar managed to again strengthen against the Canadian, and now we have some sort of indecision once again around the 134.50 level. So basically, the expectation was for the dollar to basically keep up its levels and to be able to strengthen. On that news announcement, right on that monetary statement announcement, the dollar weakened, but only it was short-lived, and now it is coming back to show that it still has some strength, and that's exactly what we can see on the dollar index and this false trendline break, as well as on the weeklies and dailies of different pairs. So it's no accident that really, because this now provides value, what we're going to be looking for is dollar-themed trades and dollar-themed possible opportunities. So one of them showing up is the dollar yen. Now, you could argue that if I'm looking at dollar strength to continue, then this trade doesn't make sense. And we could argue that the Japanese came out with a lot of information that economical information that things are looking good despite inflation being low. And there's an interesting vortex sort of around the US dollar, with some of the pairs actually giving up their weakness and some of them holding on to them in relation to the dollar. So one of them is this dollar yen, which nicely sold off due to that initial reaction. But then the yen had some strength in it, and we came below the 111 level as well as closed below the 50 EMA on the daily. Now this is quite a nice setup that we can see. The weekly as well, if you look at it, it's even better. So what we can see is a lower high based on the 50 EMA break, a bearish engulfing candle, which is now, if it retraces and holds on to the resistance of the 111 or that resistance area in between, we would see some nice lower highs, deceleration lower highs, which would and could continue into a lower leg and even hitting on that 108. Now, by make no mistake, 108 is support, so this would be the 108 level, 108.50, and 108 would be where I would be looking to target, or at least this is where we could see price forming support and reversing to the upside. That said, the only reason why we have to wait for further confirmation and we can't really go in and just sell it blindly as of right now is because if we look at this Fibonacci retracement, we are sitting on the 50% here, so this could still be a higher low in relation to this low that we could see price rally from the 107.6. So this is why we have to wait for extra confirmation and to wait for that lower high to come through and to actually reject in form of a candle pattern, in form of a price pattern, so we can see that we are actually heading lower. So once again, this could be an opportunity that we could take advantage of. Now, moving along with on the dollar line is the dollar Canadian, which again, we had a trade on, we scaled out, and then we basically, if you're in this trade already, you could look for a higher low to get back into the trade and scale in, or you could just take a fresh buy on this one, a fresh long position from the breakout zone. So the breakout zone is not really visible from the weekly or the daily, but if you check the 4-hour chart here, what you'll see is that it's a very clear resistance that we formed, and any sort of retrace within that area would provide massive value around the 133.50 level. And if that's the case, we could see once again price maintaining its higher lows and then continuing to the upside. Now, that's not to say that price could not rally from this point as well, but it's much more risky to buy at slightly at the highs, the recent highs, than if we would wait for a higher low formation. Dollar Swiss again, so as you could see, dollar Canadian is on the side of dollar strength and Canadian weakness, while dollar yen is on the side of dollar weakness and possibly yen strength. And now dollar Swiss is similar again to dollar weakness, and the reason for that is because we are right now sitting on this trend line, which is below again the 50 EMA and resistance as well. As soon as we break that, and we will see some lower highs, if we will see them, we could again look for possible short opportunities. So this is solely on the dollar. Another interesting pair is the dollar Singapore dollar, which now formed you couldn't call it a head and shoulders, but it's definitely a double bottom. Now the weekly is what got me to basically monitor this pair. Is again, you could see how the dollar index itself formed a pin bar candle from its trend line, rejecting the lows, and you can see the same thing happening on this dollar against the Singapore dollar, forming a very clear pin bar from the rejecting the lows of the 135 from the weekly chart. So as soon as we would have any sort of higher high in relation to this candle, I would be looking at it once again. And so these were only the dollar themed pairs. Now if we look on the Canadian Swiss, again, this is something that I had a trade on due to the trend line and the lower high, but we actually had 2 whole weeks of indecision, and then we only managed to sell off. So any retrace into this as well in the lower high would come as a nice opportunity. Canadian yen, very similar. So these are now Canadian themed pairs with the Canadian dollar and its possible strength. Well, not strength against the dollar, however, strength against other weaker pairs, such as the yen, such as the Swiss there. And one interesting one is the euro. The euro against the Swedish krona, which we talked about earlier. And again, I had my alert at the 110.50 level, but it's yet to materialize in any sort of way. And yes, we could say that it sort of missed my alert there, but I would be waiting for a clear lower high before getting into an exotic pair like this, which I could be looking to basically stay in a trade like this for even 1 or 2 weeks, if not more than that. So that's really it for what I'm looking at. It's a dollar themed week, and in case you're wondering, with the pound, there's still the Brexit going on in the background and the third meaningful vote, so that's the outcome of that is very uncertain, so I wouldn't look to basically trade the pound whatsoever. If you have any questions, let us know, and I shall see you in the next video. Cheers for now.